Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. If this is your first time with TradeFinder, welcome to you. For those of you that have been here numerous times, welcome to you as well. As you know, if you've seen any of our video type productions, we have to show you this disclosure/disclaimer. It is important, so please read it in detail at your leisure. If it's the first time you've seen it, a couple things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. This is our first time that we are live streaming outside of YouTube, Facebook, etc. Welcome to everybody that's on the live stream. You know how this works. Please give us a like. It helps out all the metrics, and you've been told that before. So please don't forget to hit that like button. We really do appreciate it. The way TradeFinder works is we'll go through and talk about a market update. Obviously, pretty interesting things going on in the market right now. Hopefully you watched that SPY update that we posted on YouTube over the weekend. We'll update that. We'll go through and talk about any closed alerts that we have done for our alert subscribers at Elliott Wave Options. And then when we're finished with that, we'll take a look and see if we can update previous alerts or case study considerations, as I like to call them, at TradeFinder. Because with TradeFinder, the difference between that and the alert subscription is that TradeFinder will identify a case study consideration, and then you're kind of on your own to manage it. But for our alert subscribers, we send out alerts through SMS and email on entries, any adjustments, which is a very important part of what we do at Elliott Wave Options, and exits. So that's the primary difference. And then we'll look for a case study consideration for tonight. And then with whatever time's left over at the end, we'll go through and answer any of the questions that you may have. And that usually amounts to you guys giving us some of your favorite stock symbols. And from there, we show what our indicators may be showing. So that's it. That's how the process works. So let's go ahead and get started with TradeFinder. Hopefully everybody can see the chart of the market right now. But before we get into the market, I did want to update you on our current Elliott Wave Predictive Trading webinar. You may have seen it. And if you haven't seen it on YouTube, please go visit it. We do have a wonderful special that's going on right now for our impulse strategies. Best special we've ever offered. So you can see for $89, it comes with the trade alerts, website access, which gives you access to our premium education, live insider meetings. We do those on Thursday night. That's for alert subscribers only, in addition to the education, as I mentioned. So here's everything that comes with it. And our alerts, as I said, are sent out through SMS and email, live meetings on Thursday night, our premium education, and something that we've never done before, our bundle, where we're including 3 mastery level classes along with manuals. So not only do you have the access to it when you watch the videos, but you have the manuals to go along with it. And it's our impulse pattern mastery class, which is the primary Elliott Wave pattern, as you're probably aware of, zigzag mastery, which is my favorite Elliott Wave strategy by far, and then also a class on our favorite, or my favorite, confirming indicator that we use along with Elliott Wave. We are big fans at Elliott Wave Options, hence our name, Elliott Wave Options, but we do have other indicators that go along to support Elliott Wave, and the DMI is my favorite one. So you get all of that included, and we've never offered that before. So the subscription only goes to the end of this month. Now, we did have a promotion that if you had signed up, and a lot of people signed up, and that's where the questions came from. You can see you only have a few more days to do that. But had you signed up prior to October 15th, we gave you a certificate for a free t-shirt, hat, whatever. We actually had people write in today that were looking for, can we have a hat? Even though we haven't really notified the powers that be about this, but since you're watching us on TradeFinder and you're live streaming on YouTube and Facebook and the various social media outlets, we've never done this before. So in celebration of this newfound, I am not the greatest tech guy, believe me. And so in this newfound social media world, if you do sign up with us, within the next 24 hours, then I'm going to go ahead and extend that offer for the gift certificate to where you can go. You don't have to buy a t-shirt. You can go to our store and purchase anything in the store up to $40. So you can almost get a shirt and a hat for that, because we don't have tremendous pricing along those lines. So if you'd like to join along with the alert service, there's no better time than now. There's never been a better time. So I wanted to go ahead and update you on that, since we had a number of questions come in over the past couple of days since we're past the 15th. People want to know if they could still get that. So after this, no, that's the answer is no. We wanted to stay to that date, but again, I'm letting everybody know now that's watching, and so they're probably scrambling in the back room like what, how are we going to get these certificates out? But they will get them out to you if you sign up within the next 24 hours. After that, that's it. You don't get the certificate for shirts, t-shirts, or hats, or any of those things. So
sorry,
anyway.
just to hop in real quick. It looks like your screen might be frozen. If you don't mind just refreshing so you can go over that offer page.
It's not showing the offer page.
No, it's stuck on your software at the moment.
How about now?
Good to go now.
Okay, that's one of our support guys who's probably not happy with me right now. So let me just show you the screen real quick. And it's at ewotrader.com/web-offer is where you can find this. And here's what I thought I was sharing with you, but apparently wasn't. So as you can see, the offer of $89 a month, including everything that I went through and mentioned. So there's just the screenshots of it with the manuals and all of these classes that are normally extras. The bundle itself, if you're wondering, of all that classes is $999. So basically we're giving you, in addition to the incredibly low monthly price, $1,000 worth of education completely for free. So we've never offered that bundle before. We've never offered this price before. So if you've ever considered joining the alert service, now's the time. So I'm sorry that you didn't see the screen sooner, but I've gone through and mentioned all the other things. So we'll go ahead and leave it at that. Are you seeing my screen now as far as the Elliott Wave option screen? Zach, are you seeing that?
Right now it's on Elliott Wave Predictive Trading.
Okay. So I guess I have to do this every time. So I told you that I wasn't good on technology, so I suppose I need to go through and tell the software what to look at each and every time. So since we're talking about the Impulse Strategy Alert Service, that's what we're offering. I thought I would go ahead and give you an idea of what you would get there. Normally we do this later in TradeFinder, but here we go. Each and every one of our alerts that's sent out to our subscribers has a screen that looks just like this. And we have a trade listing here under trades that goes through and lists all of our alerts, whether they're open, adjusted, closed, whatever. Every single one of our alerts has this exact same screen. And so you can see the entry and the exit. This is on USO. We've been trading energy through oil and natural gas, the XLE, et cetera, for a while. As they've been moving to the upside, we've had several trades on USO. So you can see this one here, the entry was sent out as an alert to our subscribers, again, through SMS or email. And here was the chart showing you the entry. Now, we'd been in one before. And so we had this vertical move to the upside, which we exited the previous trade. And we exited because we were overbought. Well, then we pulled back down, which is what we expected. So after that overbought condition got rectified, we entered back in again. And then you can see just 9 days later, boom, oil goes back to the upside. We're kind of in the same scenario now. Look at that doji, fairly vertical move, a little too vertical for me. I like the 45-degree angle. We're going to talk about that with the market here in a few minutes. Is that potentially a change of direction, which we did. We backed off a little bit. Move back up in oil today, so we're looking again for another entry there, but the same exact scenario on the previous oil trade. So when you get into an overbought condition, we're apt to go ahead and take the gain. So that's a 44% return in just 9 days on this alert. But all this information is available on each and every alert that we send out to our subscribers. You get the entry with charts and a description of the trade. You get this mark-to-market graph, which shows you where the position is each and every day. Note that we were down just a little bit the first day before it took off and ran up to our 44% gain, which is a $220 profit on just a $500 risk, which is where we try to keep our risk per alerts at $500 or less. You get the detail of exactly how many contracts, what strike, etc. It was in our impulse strategy. And again, that's our directional based strategy, which is what I mentioned to you with the offer that we were going through. So there you go. There's a perfect illustration of what you get when you sign up, in addition to a t-shirt or a hat. So with that, let's go ahead and move back to the market. Now, let me make sure that I'm sharing the correct screen. Are we seeing the market now, Zach?
Yep, we are back on the software, Rob.
Okay. Hey, if you hit unmute, then I can hear you.
Sorry, dealing with a couple conversations at the
moment. Sorry about that. That's making fun of me. So that's an inside joke. But so here we are with the market, and a couple things to note here. If you watch the SPY update, we had talked about the fact that we potentially were creating a triangle pattern. And so we had a big move down here, but that was divided into a couple of different let me go ahead and bring a new chart up. That was divided into a couple of different zigzag patterns. So we had a zigzag to the downside and then a zigzag to the upside. And based on triangle rules, now stay with me now, there's a potential for a triangle forming. So here was the downward zigzag, clicked on the wrong level before, and then the upward zigzag that we had moving into the weekend was there. Now, when you have two zigzags like that, because a triangle is formed from multiple zigzag patterns, three subdivisions within Elliott Wave, if you're familiar with how Elliott Wave works. So we potentially had a triangle forming along these lines, but we broke that today. So today yesterday didn't do it, but today did. And now we have to look at, do we have the possibility of a flat? We put some education in that last SPY update talking about triangle formations. And in that, we talked about the fact that you have to make sure or be aware of the fact that you might be forming a flat when you have this exact same pattern. And so that's what we have to look at now. The fact that we broke the triangle pattern, now we look at, and I'll take all this stuff off and I'll share with you what I'm talking about. And, you know, it makes you have to be aware of it with two things, in my opinion. One, the vertical nature of this move. I don't like that. Anybody that's watched any of this stuff knows that I don't like things that go vertically. I like things that go in a 45-degree angle like that. Those are the moves that I prefer, because what goes straight up quite often comes straight back down. Now, the fact that we've disqualified the triangle makes you look at the fact that, okay, we could potentially be forming a flat. Now, what would a flat be if you're not familiar with corrective patterns within Elliott Wave? Well, that would be a move back up to these previous highs. Now, in the nature of this move, the fact that it's vertical and there's gaps everywhere, gap, all these gaps everywhere, I think you have to be cautious on a potential corrective move back to the downside. Now, it doesn't mean that the market itself is going to fall apart or we're going to move into a big, massive correction in the market. But what it does mean is that the question has to be raised, is there enough momentum with such a vertical move with all these gaps, which are unusual in the SPY to start with, but is there enough momentum with all these gaps to break that previous high and just continue to run? Maybe. I think that would be surprising if that happens. Not that the market hasn't surprised me before, but what you would have in a flat is you would test those previous highs, and then you come back, and there's varying degrees of the C wave extension that you would have on the flat. Doesn't have to come all the way back down to these lows and test the lows. That's not necessary, but you would have some sort of a C wave correction after testing this. So basically the way that comes out is this move to the downside becomes A, and the corrective or the rebounding test, it is a corrective move because it's against the previous move, would be B, and then somewhere in here, we would have the C wave extension. Now, perhaps we're just extending this current upward zigzag. That is a possibility, but look where we are. So we've already passed the 100%. And normally when you pass the level that's supposed to be hit, and it was a 66% B wave correction, so call it the 61.8, 62% Fibonacci corrective level. Normally, before you would run to the extended level, you'd come back and test the previous level. But we didn't do that. So I think that brings, question again as to, can we continue to run in this extension? But if we do, if we continue higher from here without filling those gaps first, then look where the C wave extension is on the zigzag. It also coincides with right in the area, maybe just a little higher, but right in the area of that previous wave 5. So even though we have disqualified the triangle formation, it doesn't mean that we've disqualified some sort of a corrective formation following the completion of this wave 5. We could be moving into a flat now. And, when we're talking about Elliott Wave education, a lot of people poo-poo Elliott Wave as saying, oh, well, it's all things to everything. No, the beauty of Elliott Wave is there's always a contingency plan. You have a current qualified plan. And if that fails, if that pattern fails, then there's another pattern that you feel has a higher percentage chance, that's based on the numbers, of showing up. So now that the formation of the triangle has been disqualified, the likelihood of a flat becomes higher, is my point. Does that guarantee that we're going to have a flat? No, maybe we just go vertically to the moon, as everybody likes to say in these days. I don't see that. I don't think that's the likely scenario. It's possible. Anything is possible in the markets. But right now, I think we have to look at the potential formation of a flat pattern now, testing those previous highs, and then coming back with some sort of a C wave correction. Maybe all we do is come down and fill those gaps. And if you've not listened to much of my commentary before, exactly, actually one of the t-shirts that you'll find on our website is gaps get filled. And somebody did a study on that. They heard me talking about it, and they went out and they did a bunch of AI data, and it was 94% of gaps get filled. So if you think that, oh, that's BS, no, it's not. It's backed by data. Not everyone, nothing's 100%, but that's pretty doggone high. 94% of gaps get filled. So these gaps are going to get filled at some point, sooner rather than later. That's the unknown. The timing is something that we don't know. And then the last thing that I'll add on here is the 10-day moving average. And say it with me. I know if you've heard any of my stuff, you've heard this before. No security in any time frame is very far away from the 10-day moving average. And so you can see there's the 10-day moving average. Here's where we closed today. Too much separation there. I just have to believe that we're running out of steam to the upside, and we're going to see some sort of a corrective move back down. How far that goes remains to be seen. Could we test this previous high first? Certainly we could, and that would work out with the flat as well. If you're wondering right now, the futures are perfectly flat, down 1.5 points. So not a whole lot going on in the futures market. So we'll see if this moves back up and tests that previous 5. The B wave doesn't have to go all the way. I mean, there's numerous types of flats that occur. And so what the percentage of the B wave determines what the percentage of the C wave is. So if we do go and hit 100% B wave correction, meaning it goes all the way back up to that wave 5, then that affects where the C wave will go. If we stop short of that and come down, then we have different parameters for the C wave. So until that occurs, we can't really talk about where the likely C would be. But we go back to, we are currently overbought, no doubt about that. And we have gaps to fill, which is really unusual. I had made a note to our subscribers, and I post commentary on the website from time to time in between these webinars that we do that are live, talking about the fact that at one point in time, we had a downward zigzag, an upward zigzag, and a triangle all qualified at the same time. It's not unusual to have 2 corrective patterns qualified at the same time, but I don't know that I can remember having 3, all 3 of them, upward, downward, and in a triangle at the same time. I've been trading Elliott Wave since 2001, so exactly 20 years. And it may have happened. In fact, it probably has happened in some security somewhere, but I just don't know that I can remember a time when we had 3 qualified zigzags or 3 qualified corrective patterns all at the exact same time. So we don't anymore. We're starting to get some answers. Now, what do you do in that scenario? Well, what we've done is what I think is most prudent: caution. Just don't get excited and don't, jump the gun. Wait, let the market tell you what it's going to do. These things will work themselves out. And note, it did very quickly. So already that triangle has been disqualified, the one that we showed in the update. And so now we're looking to see, is the flat the current pattern, or are we extending this zigzag? But we've got some answers, but there's no way for me, and I may be completely wrong here, but there's no way that I can go long right now when we are this extended and we have all these gaps. So we're going to be patient just a little bit longer and see what happens as far as any point of, do we test the highs? Do we come back, fill the gaps first? So we're going to be cautious. And when things become a little bit clearer, that's when we go through and send out a bunch more alerts, because at that point in time, we'll have a really good idea of where things are going to go. So there's no reason to guess. This doesn't happen very often. As I said, I can't even remember a time when we had 3 patterns all qualified at the same time. Most of the time, Elliott Wave is in a current pattern and you're trading with it. And if it fails, you know what's next. And so it's boom, boom, boom. Everything is lined up and you know exactly what's going to happen. But there are points in time, and it usually happens when you've completed an impulse pattern, which we did, completed that wave 5. So there are times when you just go on pause and let the market tell you where it's going to go, let the next Elliott Wave pattern set up, and then you come in, and then you come in hard because you have an idea of where things are going to go. There's no reason to guess or jump at what may happen. And I do want to show you the TNX. We've talked about that, and if you've listened to any of those videos on YouTube, I've been talking about how I think interest rates are going to determine what happens with the equities market. Well, when interest rates backed off, the market took off to the upside. We did back down yesterday, but look at today. Now you can see that interest rates moved up today, but the market moved up today. That feels like a sucker's bet to me. And again, I could be totally wrong. I'm wrong a lot. But that feels like a sucker's bet, that if you have a scenario where interest rates go up and the market goes up, when interest rates going up is what caused this move to the downside to start with, I think they're trying to suck in some of the retail traders. And just, again, caution. Maybe we don't back off that much, but I do think that they're trying to suck people in, that FOMO, fear of missing out. You're seeing this vertical move. That's exactly the time when you back. And it's not easy, is it? When you see the market going like that and you want to be part of it, it is not easy to say, just relax. We'll wait until the market comes back to the 10-day moving average, see if those gaps get filled, see what happens with the flat, or if we're getting an extended zigzag. Just hang on. But if you'll do that, if you can be patient, and I think that's the number one thing that I've learned over my career in trading, and it's the number one thing that I try to share with our subscribers, is patience. Knowledge, education, those are keys. Most people, where you go out and you take on seminars or you watch webinars or whatever, they talk about knowledge and education is what makes you successful. Sometimes it's just plain old patience and letting the pattern come to you. Have a technical system that you trust, but let it set up. Don't run in front of the bus, if you will. Let things set up to where you have a higher percentage chance of knowing what's going on. That's exactly what we're doing right now. So let's take a look at a few other markets that a lot of you ask about. The Qs. I also want to look at the IWM, because are we breaking out of the IWM finally? Look at the Qs. Look at that pattern set up. That's a great looking wave 5 pattern to the upside. Are the Qs going to resume, he meant to say, leadership as they did prior? They corrected right with the market. So they kind of gave up that leadership role, but now moving back to the upside, again, still a little bit vertical, not quite the whole gap all over the place scenario. There's one back here. But if the Qs come back and take out this wave 3 high, and that's certainly going to be ammunition, energy, whatever you want to look at, for the market to continue to move to the upside. It's very possible, but we're not there yet. So nothing really matters until we take out that previous wave 3. So let's talk about the difference between qualified and confirmed, because that's terminology within Elliott Wave that gets people confused all the time. When people hear that a pattern is qualified, they take that as gospel, that that's going to happen. That's not what qualified means. That's what confirmed means. When you get a confirmed pattern, then you have the high degree of accuracy. When you have a qualified pattern, that means you're aware and you're watching. So it has your interest. The pattern's qualified. This may be happening. That's what that means. When it becomes confirmed, that's when you come in and you jump in, with both feet in the water, or whatever, both oars in the water, whatever analogy you want to use. And because you have a really high percentage of that occurring. So we're qualified here on a wave 5 to the upside. When does that become confirmed? If it takes out that previous 3. There's no wave 5 labeled here yet, but we know that we had a really good wave 4 correction right at the 38.2% fib level. We're moving to the upside. This is qualified. So if you want to be super aggressive, you can enter it, but know the risk that you're taking. If you want to be a little more patient, just let it go and take out that wave 3, let that 5 label. Now you have a confirmed pattern, and then you have a really high percentage chance of catching the rest of that move. So do you want to be super aggressive and maybe get caught, or do you want to just be patient and let the pattern come to you? It's your choice. It's an individual choice. And I'm not trying to tell you which is right or which is wrong. We're all in charge of our own accounts, et cetera. And so whatever is comfortable to you is acceptable. So here's the IWM. And man, we've been talking about this for so long, this trading range between 210 and 230, that the IWM has been in through the entire year. It's been in this pattern. And then you look and say, okay, well, with this market that's broken to the upside on the SPY, is the IWM finally going to break out? Well, look, it hasn't yet. And how frustrating that must be, especially when we had this triangle here, because a lot of people were asking last week, well, with the formation of this triangle, does that mean we're going to break out? Well, we've had triangles before in the IWM. And here's the one that comes to mind. It's the most recent one. And look what happened. We broke to the downside, but we held support. We broke back to the upside, but we held resistance. So it couldn't break either of those levels, even with a triangle breakout. So now we've got another triangle, even more well-formed than the previous one. Same thing. We break out and then just stop, just hit a wall. So there's a lot of people that are short the IWM because they are stepping up every time we get up to 230. And there's a lot of people that are long IWM because every time we come down to 210, it finds support. So it's almost like it's 100% a stalemate. You have equal power between longs and shorts on the IWM. And you would think that's a perfect time for a strangle because you have this nice triangle and this tug of war between the longs and the shorts, but actually not so much because nothing really matters until one of these levels gets broken. When one of these levels gets broken, it's going to be a fun run. And I don't know if it's going to be to the upside or the downside, but if we break out to the upside, that's going to be a heck of a run higher. And if we break out to the downside, that's going to be a heck of a run to the downside. But until one of those two levels gets broken, I just think you wait. And so been trying to be patient. I know that we have subscribers that in their own accounts are putting on butterflies and iron condors, et cetera. And to me, this is so extended to the sideways. I can't bring myself to do it. Hopefully they're all doing really well in their trades because the average sideways market lasts 3 to 4 months. Now we're going on 10.5 months. And so I just, at that point in time, you're moving on 3 times the normal length of a sideways market. I can't bring myself to put on a sideways trade because you need about 2 months to make a decent return. Now, I know a lot of our subscribers are doing weekly options. That's super smart. And we have a lot of really smart subscribers. They ask tremendous questions and they have great ideas. And the reason I say that smart is weeklies are juiced with premium. So rather than doing monthly options on a butterfly or a condor, et cetera, the weekly options make a lot of sense. So, that's another thing is that we have this chat available on Thursday nights where our subscribers share ideas with other subscribers. It's a community, if you will, which I know that's kind of the buzzword now, right? The communities and all the different social media platforms, et cetera. But it really is a community here. And if you did nothing more than logged in and listened to the comments that come out from our subscribers, you could gain a tremendous amount of information from them. So it's pooling, right? It's pooling of ideas. It's not just me. We have a whole group of people that have wonderful ideas, and they sometimes come out with ideas that end up being alerts because they're right. The charts are set up, and then all of a sudden our indicators fall in line, and it ends up being an alert. So anyway, the IWM, I don't know what to tell you. It's got to break 230 or 210 for me personally. And it's amazing to me that what's occurred with the SPY going gap to the upside, we weren't able to break 230 on the IWM. At some point in time, maybe it will. It hasn't yet. And then the diamonds.
Sorry, Rob, just real quick, if you wouldn't mind moving that toolbox at the top, it just doesn't seem to want to go away. So if you can physically move it to a different monitor.
Up here? That thing we're talking about?
Yes, sir.
Okay.
Perfect. Thank you.
Sure. So here's the diamonds, and kind of a similar scenario, right? Gap. Didn't get a gap today in the diamonds, but look where we are. We're ahead of the SPY. That doesn't normally happen. The SPY has been the leader for quite a while, and the Dow's been more of the follower, but not now. So we're right up here at this point, testing the recent highs. And man, if we break that, it's going to be all over the financial networks. The market's at new all-time highs. And that's another sucker's thing. When the media jumps on something, the retail traders with that FOMO, fear of missing out, all jump in, and that's the end. Because the smart traders then come in and they short all that retail buying. And that's how they make their big money with the smart traders, smart money as they're called. So this is just, for me, too vertical. And we're testing the recent highs in the Dow. Maybe we break through it. I'm super suspect of it. And if I miss the move, I miss the move. But I just feel like there's no way there's enough energy. Maybe we break the highs and that's it. And then we come back down just so that we get all the headlines and everything. So could we go a little higher? Of course we could go a little higher. Things can stay overbought or oversold for periods of time, but not for long periods of time, if that makes sense. So when we go vertically like this, and we're at a major point of resistance, I don't know. I don't see that significant move to the upside right now. Now, a rest period, consolidation, and then run to new highs. Yeah, that's very likely. I'm just talking about the very short term right now. So please understand, I'm not trying to say that I don't think the market can go make new highs. I'm not saying that at all. I'm talking about over the next few days or week, that we're just too far, too fast, calm things down, little back and filling, gain some energy back, then make a run at those new highs. Moving into the end of the year, it's very possible that occurs. So anyway, I just want to be really clear that I'm not saying that the market can't make new highs. I'm talking about the very short term and how vertical this move has been. Too much experience, too many times trying to chase vertical moves over my career as a trader to ever get caught doing that again. I just won't. I'd rather miss a few points than have a big correction go right against you at that point in time. So I know you want to look at Bitcoin and the big news of a new ETF creating this big, massive move back to the upside. And if you watch the SPY update, Elliott Wave has been so spot on with Bitcoin. It's almost uncanny how accurate it's been. But look what's happening here. I know we got the excitement over the new futures-based Bitcoin ETF, all that stuff. And so contracts have to be bought to fulfill the ETF. I think that's had a lot to do with this momentum to the upside. Don't forget, they have to have it within the ETF, and that's been pushing it higher, but we're getting a bit vertical here as well. And so not as much as the market, but a little bit vertical. And where are we? Well, we've talked about this. If you go back and play months of recordings, I shouldn't say months, weeks of recordings on the SPY. We've talked about the likelihood of coming up and testing this previous high. Felt like that was, a very strong possibility, and we have. So then is the question, are we going to make new highs? Well, here we are again in a bit of an overbought condition, and I know we're trading right now. It's trades 24/7. I know that if you're newer, again, for those of you streaming on YouTube, Facebook, etc., the different social media platforms, welcome. If you've joined us since I welcomed everybody earlier, appreciate having you. Please hit that like button. It's the first time that we've done this where we've live streamed on multiple platforms, so that would be helpful if you do that for us. But looking at these previous highs here, can we bust through that? Yeah. Could we? Yeah. But I would like to see, and I talk about this a lot, the ideal scenario, but the market doesn't always give us ideal scenarios. But the ideal scenario is for some sort of consolidation like this, or like this, or like this, underneath these highs. So we consolidate in this area, then we run, then we take off and run. Because what happens when you go too far, too fast, too vertical, you break up here, everybody gets excited, and then you come straight back down. And that's the part that we don't want. We want the runs to hold and not have significant corrections. And the more vertical a move is, the more severe the corrections are. There's always corrections. That's what Elliott Wave is, impulses and corrections. But the catch here, or the key, is how severe are those corrective moves going to be. And so the more vertical you go, the more severe the corrections are. The more towards a 45-degree angle, the weaker the corrections are. They still happen, but they're not as severe. So here we are, and we're testing those all-time highs. Please go back and look at those SPY videos and what we've talked about with Bitcoin, because it's just been absolutely spot on. And you can see here's this big, huge zigzag pattern, and look where we are, right at the 100% extension. There you go. There's a zigzag right there. My favorite directional pattern with 100% extension right here at the previous highs, right where we are. So do we consolidate now? I would love to see consolidation, possibly even come back and test this 61.8% level, and then perhaps Bitcoin runs, breaks the previous highs, moves to new all-time highs up to the 161.8% extension. That's what happens often with these zigzag patterns. We don't always test the previous fib level, but it happens a high percentage of the time, enough to where we should be aware of that. And the fact that we're overbought in addition to it makes it even more likely. But again, nothing's 100%. All right, so let's go ahead and take a look at the Nifty as well, because that's been just a stalwart in the market. And so here's the India market, and we broke out of this triangle that we had, and we talked about how as long as the Nifty stayed above 49, even as a lot of people were saying that India was in trouble with what's going on globally, as long as you stayed above 49, you had to stay long, and so that stays the same. Now we had this triangle, we had to break out. Now the other Elliott Wave rule with triangles is the triangle breakout gets retraced. Same thing with gaps. You don't know exactly when, though. So are we retracing that now? Are we coming back to test the breakout? Perhaps that's what's going on. But the same thing applies that we've been talking about for weeks, is as long as this market stays above 49, then you have to stay long. And then last but not least, the XJO for Australia. And you can see really nice breakout from this triangle pattern right here. And there's the kind of breakout that you want that tends to hold. So not dealing with all the gappiness on the SPY. And we turn the Elliott Wave pattern back on. You can see that we had the wave 5 here. We came down. It's a 38% corrective level, by the way. And so then we consolidated right at that level, just classic Elliott Wave stuff. And we're breaking out of the triangle. How far will the breakout go? Now we'll just have to wait and see. We're getting to the point where we're not too far from where the expected move would be. The way you know that is you take the high and the low on the mouth of the triangle, and that gives you approximately the amount of points that the breakout's going to be upon the breakout of the triangle. Just uncanny how it works. So in other words, you talk about or you look at, all right, there was the high, there's the low, how many points is that? Then from this midpoint, that's the number of points that it's expected to move. And it just nailed it, such an extremely high percentage of the time. So we like triangles as well. So pretty nice breakout of the XJO, looks really good. I know that a lot of people in Australia have been asking about iron ore. You guys are the kings of that. I know China needs it, etc. So pretty good looking breakout chart there, just super classic there as well. And if we go back here and look at this corrective move, well, I'll just give you the percentages and see what I was talking about. We came down to a 38.2% correction, consolidated into a triangle and broke out. Just Elliott Wave Fibonacci stuff all over the place. So that gives you a more extended look at the markets than we normally do. But I just felt like with what's going on right now, it's important to really go into detail what we're seeing with the markets. So let's take a look at some of our previous TradeFinder case study considerations, and then we'll look for a new one tonight and then open it up to potential questions. So back here on 8/24, we had this position set up on Align Technology. And to bring that up to date, you can see what happened here. Now, what happened? Well, first of all, you're in a wave 3. And so the key when you're in a wave 3 is always the question, when will the wave 4 start, right? That's the big question that everybody throws up in here. We have the wave 4, and we've come down to this fib level, just over the 62% fib level. But what happened was there was a report, a short report came out talking about other stocks in the sector, Smile Direct being one of them, that didn't report very good earnings. And so the report said, hey, we're not expecting Align Technologies to have a very good earnings report either. And so that was it. That stopped the upward momentum, and that's where you had the big corrective move. Now, was that fair or not? You can argue when these companies put out these short reports, when they say, hey, we're short the stock, and then they put out a short report. Well, you know, that's it just doesn't seem right at times. And there's a lot of controversy along those scenarios, but that's what happened. But we are consolidating right here, and there's the earnings report coming out. So at any point through there, you decided that you wanted to close that position out on the way down, or you wanted to wait and see if the wave 4 was going to form. And then if it moved back to the upside, add to it. But you do have the earnings report coming up, and anything could happen. You know, maybe they're right, or maybe that was all just a guise and a good opportunity for them to push the stock down when they were already saying that they were short the stock. Then we have CWH. This was a strangle. You can see the triangle formation that we had here. And then here's where we are currently. So kind of a little bit of an upward breakout, test the breakout, moving back down. So we're at an area of support here. And that's not normally what happens with triangles. Usually you don't get this double breakout where you break down and then kind of back up. But look what happened. So basically what we did was we formed a larger triangle. And that's what happens when you have false breakouts. You never get false breakouts in both directions. It doesn't happen. What's occurring then is you're forming a larger triangle. So there's the breakout. And so we break out, we've got some confirmation. We're coming back to test the breakout line, and we'll see how that plays out. And I've talked about this a lot. I don't know how this stock has hung in there this long. They're expensive, and you know, interest rates are going up, so it's going to cost more there. They're gas guzzlers, so you know, until Tesla or somebody comes out with a you know, a big motorhome that's electric, going to be subject to gas prices. So it just seems to me like there's a lot of fundamental metrics that are against this, not just this stock, but the whole sector. But hey, for now, it's hanging in there. But if it breaks that 36 level, then Katie bar the door, we're going to the downside. So looking at bots, we had this scenario and it moved down. Another one, is this the same thing that's happening with the line? Maybe. Found the wave 4 again, right there around the 62% fib level and moving straight up since. So perhaps we're on our way up to the wave 5 high now. We just needed to form that wave 4 and come down and test this massive area of support that's all through right here, exactly where the wave 4 formed. And then we had this one, CPLG, and this one was from our momentum search, lower dollar stocks. And you can see that one's moved to the upside from there. And, at some point in time, when you're going to take profits, it hasn't been a massive move. But when we got to the point here on this high where we're about 10%, and that's usually what we look for. And so we've tested that back here on the 15th. Maybe you hang in there a little bit longer, but this is where you have to decide when you want to take your profits. So, I mean, you could easily close that one out. And then check this out. Fizz, we talked about this being a defensive sector. When the market starts to get wobbly or squirrely, money moves into more defensive sectors. It has to go somewhere. Look at that move. So we're going to go ahead and close that one out, take the gain there, and say that's the end of that case study consideration. If you're hanging in there longer, you're just getting greedy. And then here's where adjustments come into play. So this was on the corrective search, and we had this big move to the downside, which looked like we could be coming down to test this previous 4, but it hasn't. And here's what we've been looking for that occurred today. It broke the wave 5 high, and it made a new wave 5 high. So that's when you say, okay, well, the correction consolidated. It didn't come all the way back to the previous 4. What does that mean? Well, it means this was just a correction in the wave 5. And so now you adjust and you turn around and you go back to the long side. That's what you do on this because it made a new wave 5 high. That's the idea. And that's how the adjustment process works. And here's another one on ENLC, also out of our momentum search, lower dollar stocks. What we're trying to do is fulfill that need of, the Robinhood, the Wall Street Bets group that are just looking for stocks that have high short interest, and they try to stick it to the suits, not realizing that retail traders don't have enough money to create short covering. They have to have a institution or a hedge fund come in behind them and push them up. And, that's what's occurred. And that's a lot of the retail traders have been left holding the bag on moves like that. But look at that move. And that one's getting pretty vertical. So that one's gone too. So if you hadn't taken that one off, again, if you're still holding that one, you're getting greedy here as well. So these are all getting closed off. We're not going to look at them again. So here was Texas Roadhouse, and we were looking with what was going on in the market, looked for another strangle. And so here is a triangle setup. And then here's where we are now. We broke to the downside, and we're holding the last bastion of support there. If it breaks that, then whoo, look at that. That's about 10 more points to the downside if it can't hold this. So we're already from 94 down. That's a 6-point drop to the downside. We could get 10 more. That would be a really nice strangle trade if it breaks through this 88 level and continues lower from here. And then you can see that not only do we have that consolidation, but we also have a long period there of lower highs. So kind of plays into the fact that perhaps we break lower from here. So that catches you up on previous case studies. So you also got a taste of how to work an adjustment. Why just walk away from a trade and take the loss when you can adjust it and fix it and recover, if not all, a great portion of the loss. I don't think it makes any sense not to do that. So we'll go ahead and take a look at our pre-computed list. For those of you that may be new and wondering what this software program is, this is called Profit Source. It's created by an organization called Hub, H-U-B-B, HUBB.com. You can find out more about it. To me, it's the best Elliott Wave software program that exists. I've tried all that I know that exists. This one's programmed directly from Elliott's own algorithm. There's a lot of Elliott Wave software programs out there that are people's personal adaptations of Elliott Wave, things that they identify with or change the system a bit. I want to stay pure to the math that created the Elliott Wave algorithm. So that's why I like this one. Plus, you can create your own searches. And if you're an Elliott Wave Options alert subscriber, they created this tab here. If you're not an Elliott Wave Options subscriber and you have Profit Source, you don't get these tabs. They noted that, I guess, since I use it, a lot of people were starting to sign up for it. And so they created these for all of our Elliott Wave Option Alert subscribers. So any one of these things that says EWO, those are my personal searches that have been created. So you can see exactly what I'm looking at every single day. And so a lot of times we get questions. You can ask questions to support. We have a great support staff, 24 hours, and you can send questions directly to me as well if you would like. You have full access from a support standpoint. So if you find some of these, and a lot of our subscribers do this, and you have a question, why wasn't this selected as an alert? Why was this? Get those questions all the time. And we'll go through and talk about those. So you can see that we have some in the momentum search that have showed up, but we have 6 in the impulse. So let's go ahead and take a look at that in the impulse move. Now, another thing you can do, which is really cool, is you can combine these. So let's look at the bullish wave 3 to see if any of those are in the wave 3. And there is one, and it's a financial. That makes sense, doesn't it? Talking about interest rates going up and financials being able to do well. The financial sector reported pretty good numbers, which is kind of what turned around the corrective move. And you can see there's their indicators that are all tied in there, and you can take a look at each individual one. I'll go ahead and bring back that. A little doji today, though, so might need to be aware of that because we're just a tiny bit overbought. So maybe we need to rest here a little bit, come back down towards that 10-day moving average. If you look at the DMI, it looks great. That's our favored confirming technical indicator. That one's included with the current offer that we have right now. So take advantage of learning more about that indicator. We have a master class that goes basically takes a deep dive into how that indicator works. There's a lot of information in this one indicator. So that looks really good. It's about as good as it gets. The ADX moving up, which measures strength of a trend, not direction, but strength. And then the 2 directional indicators, those are the ones that measure direction. So the green one is positive. So that's the bullish one. You can see it's moving up, and the red's negative, moving down. So even on a day with a doji, you have the positive directional indicator moving up and the red moving down. That gives you an indication that this is more of a pause than a reversal. So just maybe let it go sideways for a bit here and then continue its move back to the upside. 56 to 58. Let's look and see what else we can find. There's not that many of them. So that's the beauty of being able to have these pre-computed searches, right? So you take thousands of optionable stocks, and we will it down to 6 that we're interested in. So this is what I do every day, is that I'll take a look at these 6, and then we'll apply Elliott Wave. So first of all, I like to see what's on this. So there's Sun Life. That's the one that we just looked at. L3 Harris, that's actually a local one here in Florida. So we'll take a look at this chart. That looks pretty darn good. Again, in the more defensive sector. So are we having some market rotation here? Maybe. I mean, the Qs are looking like maybe they want to set up for another run, but you have to respect this breakout here. This is a stock that I'm, as I said, very familiar with, but you can see it's not, it takes forever to move. It's not a big mover. That looks like a decent move, but that's all year it's taken. But now it's gone vertical, but we're at a fib resistance level, right? We're at the 61.8% level. We've gone a little vertical. We're a tiny bit overbought. The ADX came down. It didn't quite make it to 20. I would have preferred that. Again, all that stuff is in the masterclass on the DMI to turn back to the upside. That maybe this goes back higher from here. If it turns back above 25, the ADX and the 2 directional indicators continue to separate, we could continue that move. It's certainly a breakout to new highs, so it's in clean air. I use a lot of analogies if you're new to listening to me, and one of them is racing, and clean air is the car that's out front, right? It's got clean air coming into the radiator, so keeps the engine cool, helps the engine run better. If you're back in the pack, you got everybody's exhaust, you got the little bits coming off the tires, you got all that junk coming into your radiator and your engine. Doesn't perform as well, harder to get to the front. But when you're running free and clean air, you can take off and go. So that's the same thing that's occurring here. Perhaps the stock continues and runs from here. It's possible, but I still want to see some of the other ones and see if maybe we can't find something else. I do like the fact that it's a defensive sector, but it's a tiny bit overbought and it's at a resistance level. So let's see what else is on our list here. Paychecks. Well, take a look at that one, and oh man, the ADX is too high, isn't it? Look at where the ADX is. It's in that nosebleed section, kind of, and not quite. And it's not as high as I thought it was, but it's at 35. You would want to see this positive directional indicator break above the ADX. It looks like it might be doing that. This is a little troubling that we're kind of in the area where the ADX has run into resistance before, right there at 40, which makes sense. So could we get another run to 40? We easily could. So we could get the ADX to run back to 40 and the stock to run to its target here. That's very doable on paychecks. And that's a pretty good move. We're coming into the holiday season, so those kind of stocks tend to do well during this time frame. So that, that could be a really good one there. Money flow is as good as it gets. That's what you want it to look like there. And let's look at the CCI. That looks good too. In other words, there's room to run. We're not even at the upper end of the threshold there, and certainly not at an extreme point high. Again, more stuff. We have a whole series of classes on our individual indicators, so you can learn about all of these. But that looks really good. I think this one is my favorite one. So we're going to go ahead and label paychecks tonight on 10/19. That's going to be our case study consideration for this week, with a move from 121 up to 126 and possibly 130. So that's what we're looking at. That's going to be our case study consideration tonight, as I said. So we're already an hour in and we haven't got to questions. So I'll go ahead and take some questions now. But again, PAYX, that's what we're looking at for this week. So looking at some of the stock symbols, Twitter, take a look at Twitter, and back above 65 there, Poncash. So should be feeling pretty good about that. Held 60s, we talked about multiple times, back above there. Let's look at the DMI. Whew. If that ADX could move up, I'm a little bit suspect of whether or not this resistance will hold again, because the ADX is so low. But if that ADX can get back above 20 and the two directional indicators separating, Twitter could take off and run. But at this point in time, we have to look and see if we're going to run into this resistance at 70. Now, what would set up ideally for this is we take another run at 70, but this time we have support from the DMI. This time we have, see, because we didn't have it back here, we didn't have it back here either. We were already overbought. So if we take a run at 70 when we're getting just the entry signal from the DMI, that could be the catalyst to break it above 70. But just, a little bit of caution before them. Taiwan Semiconductor, I'm amazed that, that these stocks are hanging in there with all of the bone rattling, if you want to call it that China is doing towards Taiwan right now, rattling their sabers, flying planes, and all kinds of stuff that is threatening. They don't want Taiwan to think that they're independent at all. The 10-day moving average is about to cross the 30 though. So if you get a bullish cross here, we did get a cross in the two directional indicators. The ADX needs to curl back to the upside though. So we're setting up for maybe another run at 125 and see what happens there, but it had to hold 110 and it did. So see what happens from there, but we need to see more from my standpoint out of the DMI. So SJM, Mike's asking. And man, that is consolidating. Is getting, I've traded Smuckers in the past and it's done this before. And it was painful waiting for enough of a breakout to generate a gain. And I do like this pattern though. Normally we talk about when a stock goes vertically to the upside and then it goes into a symmetrical triangle. That's my favorite pattern setup. And so it looks like that's going to break out. It's just going to break out. It always does. Well, this is the opposite, right? So here we had a vertical move down and we're forming a symmetrical triangle. So it's really the same thing, just in the opposite direction. So that works as well. And the question is, which way are we going to break? Now with this pattern, I would be more interested in doing something on Smuckers, just again, past history. Again, it just doesn't move a whole lot. but this is a different setup. The ADX it's pretty low. Didn't quite make 13, but awfully close to it. And maybe it hits it the next day or two. It looks like maybe that's the end of it. Yeah, I mean, that's better than usually what I look at as far, because Smuckers consolidates a lot, but that's pretty good looking pattern. We'll see where that goes from here. And then well, the HII, take a look at that. There you go. So there's the vertical move. Usually it's more than that, but that's still the pattern, right, that I just described to you. So these are both good. Vertical move to the upside. There's your symmetrical triangle. Now, how big is the move? That's going to be the question. 205 to 215. That's only a 10-point move out of a $200 stock. And we want the breakout to be about 10% of the price of the stock. So as good as that looks, I'm worried that there's enough of a breakout there. So I'd back off that one and still stay a little bit more with the Smuckers trade. Rhythm, the 1030 50 crossover, which stock are we talking about on that one? Joe's asking, I assume you're talking about on the SPY. If B wave goes up to 460, should the C wave extend past? And not necessarily, but it could. So it depends on what happens from there. So if we do get this B wave that comes up here, hits 460, well, let me change that. If we had 100% B wave extension, then the C wave could be what's called an extended C wave in a flat, and that could break below the lows. But normally what happens if you have a B wave that exceeds A, then the C wave is not as long. So it doesn't work that if you have a really big B that you're going to have a super long C. It actually is the opposite. The C tends to be shorter. So if we did go up and hit that and then we came back down, you look for a C that would stop before it got down towards this support level 430. So interesting stuff. We looked at the SPY and the IWM. Vince says things are blurry. Is it better now? Is the screen better? Or were you talking about the market is blurry? Maybe that's what you meant. Yeah, things are very blurry right now. Peter, it's good to see you again. George on IWT. Let's take a look at that. Yeah, we do a lot of really good things at Elliott Wave Options here, education wise especially. So transportation, it's in a wave 5 to the downside, but we have to see if this wave 4 holds. There's a lot of people that believe that transportations lead the market, right? That's kind of part of old Dow theory. And so you would want to see the transportation sector break above that if that's going to be supportive of the market continuing to move to the upside. So this move up just to create a really good looking wave 4, because we're right between 50 and 61.8. That's a solid level, in addition to the fact that we're against major resistance to hold there. So if the transports can break above there, but look, they're going to have another head bump here at 270. See, this is stuff that really makes me cautious of too much more of a move to the upside. And then we have the resistance at the previous highs. So could it happen? Yeah, but it's a bumpy road. How about that for an analogy for the transportation ETF? But it's a bumpy road as far as getting too much higher from here, but it could, wave 4 could come to 270, get us maybe around the 61.8% level. If it breaks above that and tests the all-time highs, everything could be different. I really want to emphasize that I think just don't get caught up in this vertical move and get too aggressive right now. We could go a little higher, but please don't be aggressive with it right now. It's just the market is too vertical right now. Alibaba and the Chinese stocks have caught a little bit of a bid now. So now we find out, right? This is where the resistance is at 180. So can we break that level and go back higher from here? Maybe, but so far, all we've done is formed a wave 4 in the wave 5 pattern to the downside. Is China going to back off their companies? I don't know. It just got to the point where they did a little bit of a bounce. Remember, everything is impulses and corrections. And so this bounce back up really hasn't changed much of anything as far as the move to the downside, just a bit of a bounce here. If it can get back above 200 with the connotation of that big round number and creating a higher wave 4, then I think maybe you have something there. But at this point, first of all, it's too vertical and we're at a point of potential resistance here. So I think, again, cautious on the China stocks as well. How might you form a strangle if you're long the stock? Good question. So if you're already long, you would have to, it would depend on, okay, do you have profit? Are you looking to create a strangle to protect the profit, or you break even, or you a little bit of loss if you're long and it's moved to the upside? All those things would play into what delta you would select on the puts. In general terms, you would want to counteract what you have. So if you've already got profit in there, then you want to protect it. So you might select a slightly higher delta on the put at that point in time, still giving yourself a chance to make money if it breaks and continues to the upside, but protect those gains if it breaks to the downside. That's really the reason you'd want to move into a strangle if you're already long the stock and it moved higher. You're thinking of it as more as a protective. But if you're long the stock and it hasn't moved, well, then we're looking at creating, the deltas at around 25 or 30 and putting all the math and the movements of the markets in our favor. So I hate that, but it's kind of depends. The SPY rhythm, yeah. Van, what stock are we looking at the market for the check and money flow? Now you can see that we don't have divergence here, right? We actually have confirmation, and that might, for those of you not familiar with it, might wait a minute. It's all red. That's negative. That's divergence. Now the fact that it's moving to the upside this way is actually confirmation. The divergence would be today, where we had an upward day and then we had a longer bar than we had yesterday. That's where the divergence would come in. But at this point in time, I think you have to be careful with the vertical nature. But yeah, CMF is a good one. Momo. It's a great name, right? So that's a pretty strong move. If Elliott Wave rules hold, it should go up and test that previous 4. So it should go to 14. The only thing that makes me pause is it's awfully vertical, which, as you know by now, I hate. But you had a good positive 1030 crossing the 50-day moving average as well. It's got a little bit of resistance here, and it's a little overbought. So we're overbought from the 10-day moving average. Perhaps this is a good area to consolidate. But at some point in time, it should go up and hit that previous 4. Now after that, all bets are off because there's a whole bunch of resistance right there. So getting back to 14, then you see from there what can happen. But at this point in time, it's just a touch overbought. Again, a little bit of consolidation, then maybe make a run at 14 and reevaluate it there. Scott wants to look at eBay. So take a look at eBay. I'm just going as fast as I can. We'll get a few more of these in here. Major resistance here, also a good time of the year, right? For anything retail oriented, especially online. Retailers, a bit of a triangle here. We'll see where the ADX here. It's not the most well-formed. It's not low enough. It's not the most well-formed triangle, but it's a bit of one as it is. And we have this sideways stuff, which I talk about, live on the Space Coast, kind of a launch pad effect. So we go really sideways here. Let's see what's the DMI doing here. Yeah, the two directional indicators are staying very far apart, considering how sideways it's gone. So we've gone dead sideways for over a week, and yet there hasn't been much of a collapse down between the two directional indicators, which that leads me to believe that this one does have a chance for that blast off coming from the launch pad. So you have a real sideways consolidation, and then often you get a blast off. So if that's what you were talking about here, yeah, I think that's a pretty decent candidate for that. Now that's not a good CMF day, but I think you have to caution that. Yeah, it closed near the low, but it closed above the low was higher than the low of yesterday. So I think this still holds as a candidate there. Non-committal on the CCI. Maybe it means that we need to consolidate just a little bit more, but I'd certainly be interested to see if that can break above there. If it can start to move up, then I think it hits that wave 5 target really easily. I don't think that's a problem at all. Alto, we haven't looked at that one in a while. That used to be one that traded a lot. Was that earnings today? Is that what happened? Big move to the downside. I'm assuming that we're moving into earnings season. So I'm guessing that's what that is. Bit oversold right now, and also at support right here. So the key is going to be tomorrow. Does it get follow through? If it does, then the next area of support is pretty strong down at 340. So if it does get any follow through, it could come down to 340. At that point in time, there's a massive amount of support between 320 and 340. So if it comes down into here, it would be hard pressed to get much lower than that. And it may not go any lower than where it is right now, especially if that was an earnings report. It could be an overreaction, 10-point drop or 10% drop in one day. That's a big move. So, well, we'll see if it can hold at 340 or where it goes from here. That's pretty interesting. Baidu staying in the China theme along with Baba. You can see they both have caught a bid here. But back at resistance here, interestingly enough, at the same price, both Baidu and Alibaba at 180 as resistance. So we'll have to see if they can move from here. But again, fairly vertical, overbought right now. And so resistance, too vertical, overbought, maybe consolidates here. So if they can consolidate and the Chinese government stays out of the way, then these stocks, they're no different than where they were when they were running like crazy back up to these much higher prices. It's just the regulations that they're being saddled with can sap profitability, sap margins, makes it more difficult. So that's where the unknown factor comes in with these. Is it just seems like every time they catch their breath and things seem to calm down, then the Chinese government releases some sort of another sanction or restriction or something along those lines. It makes those very difficult, but they are oversold. And when you have a market that runs, the money has to go somewhere. And when you hear the rotation means that the money is trying to find where are the underperforming stocks, where are the stocks that have not performed with the market that might have better value. And certainly the Chinese stocks have not performed well. They certainly haven't performed with the market. They're catching a little bit of a bid. Can it continue? So here's a good DMI thing right here. You'll get more of this in the class. But the ADX breaking above 20 here is a signal that we look for, but it's broken above the negative directional indicator. There's great separation here, but that ADX has to break 20. And then you can look at, well, it's going to do it tomorrow. But our subscribers know that just because it looks like that, it doesn't mean it's breaking above 20 tomorrow. Sometimes they come up here and then they turn and they head back down, and it gives you the massive head fake. So it has to actually break it. But if it does, then maybe there is enough momentum for it to come back up and retest that previous 4, or at least get above that resistance level there at 180. Those are going to be very, very interesting to watch. Okay, Van's saying any of the equities, so fan of the CMF, which is good. So there you go. There's support there. That looks better than it did on was it Alibaba that had the oh no, it's eBay that had the bad day. That's what you want it to look like as far as confirmation of a continued break. So yeah, I mean, if the ADX breaks above by the 20 on Baidu tomorrow, that could be as good of a long position as we look. All right, one more. We'll do silver and then we'll wrap things up. Thanks everybody for your attention. Those of you that were live streaming with us for the first time, celebrating, thank you. Appreciate it very much. Again, don't forget to hit that like button if you haven't already. Really appreciate it. Look at this Elliott wave pattern here in silver. So the 37% wave 4 correction, 38.2, 61.8% extension. That's exactly what's supposed to happen. And it looks like silver wants to try to go back up and test the previous 4. I think that's what we talked about last time we looked at it. But if we look right now, we're maybe just a touch overbought. There's separation there. Maybe it needs to rest. The 10 is trying to cross the 30. So up to 23. But you know, the liquidity makes you think that these stocks want to run, but inflation and interest rates make you think that they've got a headwind. Really tough to know on gold and silver right now. They're challenging. Do have a little bit of confirmation there with the move to the upside. Hasn't crossed the positive line yet. You can see that bar makes sense because we opened on the high and closed on the low. So that's when you normally get one of those bars there. On the CMF, we look at the CCI, it's in the upper threshold of the range. So I think everything is pointing to a bit of a rest out of silver. Probably gold is the same way as well. And then we'll see what happens from there. But I think the rest of the year is going to be really interesting on these. Little different chart, isn't it, on gold? Talked about this before. Way back, we traded silver a lot. And silver was the leader. It used to be gold always led. Silver was the follower. It was the younger brother tagging along. But now it's the exact opposite. Silver's the leader and gold tags along. And a lot of people think that's because electronics, et cetera, have silver in them. Whatever the reason is, it's a noticeable change. But gold has this really nice triangle here. We have a strangle on it because it looks like it could go anywhere. We'll see if it continues to break to the upside or not. So again, thanks everybody for your attention. Hope you found this informative. Appreciate your time. Time is the most valuable thing that we all have. And when you spend it with us, we want to make sure that we make it a valuable use of your time. So hopefully that was informative and educational. Have a great week. Look forward to talking again next week.